What's going on, guys? It's Ricky with TechBit Solutions. I hope that you guys are all having an amazing day. And based on the messages that I see in the live stream right here, you guys are horrible people. You guys are saying that you guys are super intrigued and are actually, I don't know if it's just because of the thumbnail or something like that. It's a little bit more, it's not just me smiling based on me talking about like profits that I made. Uh, you guys cracked me up. I'm going to talk about this trade that I took today. And if for all those that are a part of Learn, Plan, Profit, you guys saw me trade live today. And I talked about this specific ETF that I ended up taking a position on. I'm going to be talking about why it was a mistake. Um, and I want you guys to know, and I know a lot of you guys are going to be like, well, what the heck? This is not exactly what I expected. But um, it was such a bad trade, and I knew it from the very beginning that even when I got in and then I realized something that I my attitude completely changed. First of all, I invested a dollar amount that was too high at a certain price point that was way overextended. First mistake. The second thing was I was getting in because of this this almost desire to want to trade every day, right? Have you guys ever been there where you guys want to take a position almost every single day just to continue the growth? Yesterday was a solid trade or a solid day, a little bit over $500. The day before was a little bit, it wasn't a huge day. It's not a huge week. And I felt like the weeks prior, being able to cover $3,800, 3,000, $3,300. I had a huge expectation, almost like a quota to meet, right? Have you guys ever been there? And it made me take a position that I 100% knew it was overextended. It was the biggest thing is that there was this natural gas report that was going to come out in 12 minutes. 12 minutes. I knew that this natural gas report, based on previous patterns, does have an influence on these ETFs, on DGAS and UGAS. I knew. You guys, if you guys, for all those that are part of Learn, Plan, Profit, go to the morning chat library, and you'll be able to see within the last 10 minutes that I was starting to review the every Thursday at around 7:30, right? 7:30 Mountain Standard Time. I was starting to review like if these reports acted as a catalyst. Of course it does. The reports based on natural gas reports, right? It makes sense. UGAS and DGAS being an ETF solely based on that, I knew that it was going to have an influence on it. And yet I still took a $20,000 position. The reason that I was so upset with myself after the report took off was because right as the report presented itself, this is what happened. So I'll just do this. So this is what happened. I ended up, so what we were talking about was this resistance that it had at around 28.30. No, I'm sorry. It was around 20. It was 29.40 when I was showing signs of an uptrend pattern. It had a really solid push up, and I took a small position. No, I took the bigger position, right? It pushed up, it started to consolidate, and then I saw it starting to get rejected. And then that's where I was like, I messed up. Everyone's starting to realize that in the next 12 to 10 minutes, 7:30, there's going to be a report which is going to have an influence on the stock or the ETF itself. And what happens 10 minutes later? In 1 second, literally 9:30 or 7:30 on the dot, from 29.20 all the way down to 28.46. You guys might be asking yourself, well, why does that really matter? 2.6% of $20,000. You can do the math there. It continues to descend and it continues to descend. When it broke below $28, I shut off my phone because I ended up closing my computer and I was trading on my phone. I shut off my phone. There's one thing that I did first. I looked at this 180-day analysis and I asked myself, is there a break of pattern? The reason that I first invested in DGAS was because it was actively trending up above the EMA, right? Yesterday, I had a position, it was trending down, and that's why I covered my position. Now, when there was this huge push up and then this huge pullback, I was asking myself, is there a break of pattern? Are the bodies of the candle holding below the EMA line? And I knew the answer was no. So there was no break of pattern. And based on the video that I made yesterday, I knew that there was no break of pattern, and it was just the dollar amount that I invested was way too high, right? Looking at the 1 day, 1 minute chart, I missed out I could have easily prevented this huge loss that I experienced by being more patient. I knew that there was an earnings. I knew that there was a. So just think about and take this into consideration. There's a lot of earning reports that are going to be coming out in the next 2 weeks, right? I knew that there was going to be a natural gas report in the next couple of minutes, and I didn't take the step that probably a beginner would have taken to be like, hey, let me just see what the natural gas report ends up producing or reporting, and then maybe I'll make my trade that's of $20,000 based off of that. Because if I do it before the overall report, it probably is not the safest trade, right? There's a huge risk involved on how that news can act as a catalyst to either drive the price up or down, especially when something was actively trending down with the past couple of days, right? Looking at the past couple of days, it wasn't until today that it broke above and started showing signs of a true uptrend pattern. It's the past couple of days that it was getting rejected by the SMA, by the EMA, right? So why did I take the position of going in a little bit too early? That is why I'm calling this one of my worst trades, right? Now, as a majority of you guys could see, there is a recovery of what has happened, right? And I want to hear what you guys have to say about this one. There's this like bull flag pattern that is forming, this resistance at around 2960, and then the EMA acting as a support, so it's showing signs of this bull flag pattern, and it's done this all morning ever since its recovery. Do you guys see this? It did it right here, consolidation, bull flag pattern, resistance there, and then it pops up and breaks above. Bull flag pattern here, pops up, breaks above. Bull flag pattern here, pops up, breaks above. Bull flag pattern here, and it would make sense on would pop up and break above, unless it breaks a bit below the EMA, and then it goes from there. So what I asked myself was, so DGAS absolutely killed it. My call out on DGAS was great. My exposure about DGAS was great within the past couple of days. So you guys can watch any of my videos. The call out was great. My entry was horrible. And that's why I'm calling this one of my worst trades. I mean, I've taken a loss on drip, and I wouldn't even necessarily call that necessarily such a bad trade. I mean, it was a bad trade, don't get me wrong. When it comes down to dollar loss, 100%. And if you guys are asking, I did not take a loss on this one. I'm up $168 on this position still. The reason that I did not cut losses is because there was no break of pattern based on why I originally saw value. And that's between the margins of actively trending up from the 180-day EMA and the margins from $28 to $30. So I'm still up on the day, and you guys can see here, right? $168. That's 100%. I know that that's a lot of money. That's still a great amount of money, right? But that's not why I would. It's not even it's the principle of understanding what I'm trading. And I need you guys to understand this. As dumb as that might sound, it's the understanding and the pattern of what you are trading and understanding. I understood. If you did not know that there was a natural gas report coming out and you took a position based on the pattern, that's a simple mistake that you would have made. But when I'm talking about literally, we talked about in the Learn Plan Profit group about the natural gas reports right before I even took the position, and I still took a position. It's like telling you, like, hey, if you step on that, or what is it? Oh, the floors are wet. Don't run through the house. And knowingly, you know that the floors are wet, that it can be, man, that's a good metaphor. That, if you end up running, that there's a high possibility of you to fall, right? And if I run purposely and then I fall, that's my fault. But if no one told me that someone mopped the floor and I just start running into the house and I slip and fall, well, I didn't really know, right? And that's mainly beginners. So why I'm making this video is because of my inability to be patient on this specific trade. It led me to miss out on easily $1,000 profit that I could have made today if I would have taken 15 minutes, 10 minutes max. I would have taken a step back and would have asked myself, okay, is this the best time to take a position, or should I just wait until this natural gas report comes out? And this is what I want. I think it's perfect timing for this video. And the reason why is because I need you guys to ask yourself this same thing, leading up to a bunch of these stocks that are actively trending up. I'm sorry, a lot of these stocks that are going to be going through earnings reports. I need you guys to ask yourself, as these stocks start to approach earning reports, I need you guys to ask yourself, should I take a position now, even though it looks like a good deal, or should I wait after what can act as a catalyst to drive the price up or down, such as these earning reports, and then trade based off of that. Because based on our experience, we know that earning reports, even if they do end up hitting their earnings, they can experience huge pullbacks because their guidance can be a little bit off. During earning reports, that's when I do my most dip buys. That's when I see huge companies have huge sell-offs. I wait for the reversals and I take advantage of that, and I trade them until they recover. Very simple. And what I wanted to use this as an example is, so when next time you take your position, when you take your position, before you take your position, just ask yourself, should I wait? Should I wait either another day? Should I wait, until after the earnings reports? Or should I wait till their natural gas reporting ends up coming out so I can trade based on the news that is most likely going to come out after that? So D-gas just broke above 29.60. So, and I know some of you guys might have wanted to see me like take a huge loss or something like that. So yeah, I still have only taken 2 losses year to date. But it's not even about the principle of like having a red day or a green day that I take on as a loss, right? I mean, as a dollar value loss, yes, but I would call this a missed opportunity and a rookie mistake on my part. I could have easily avoided what it is that I did today, and I should have led by example, especially within my Learn Plan Profit group. So I want to apologize to all of you guys, especially as we're moving on forward and knowing, and you guys all understand that there's a series of ETFs that have, D-gas, that has this natural gas report that they release every single week on Thursday at 7:30 Mountain Standard Time. So about 1 hour after the market opens. If I simply would have taken a step back and would have relaxed, I would have been up over $1,000 profit today. But, we all make mistakes. Let my mistake be something that you can use as an example on why you should not do this, on why you should wait before the earnings report. In my opinion, in my experience, when I hold something over earnings, it doesn't always end up being green. The majority of the time, it ends up being red. There's huge pullbacks. There's videos that I have on YouTube, especially within the Learn Plan Profit lesson library, that talks about how to perform and trade earnings. It talks about a couple different stocks being overextended right before the earnings, and even if they end up hitting their expectation, because they're so overextended, they have a huge pullback. AMD is a perfect example of that. Please be patient. Please ask yourself, is this the best time to take the position, or should I wait? Patience has to be one of the biggest factors when it comes down to investing in the stock market. Because if I would have waited, I could have taken 10 of you, or what is that, like 40 of you, out to Raising Cane's today, and we could have all had amazing 3-piece chicken finger combo. But no, I ended up taking a position too early, and I'm still green, right? But I missed out on a huge opportunity. And yeah. All right. 100%. So Ryan is saying the mind game is the hardest part of the game. 100% understand. So dude, I'm down for Canes. I like that. So Muhammad is saying, Ricky, your video yesterday saved my butt today. You made the same. That's super cool. Super glad to hear that, Muhammad. You're the reason that I actually made the video. So, of course. So, thank you guys again so much. If you guys can recommend this video to anyone that is potentially taking a position before the confirmation, just have them refer to this video. I think that this video does a pretty good job talking about what I saw beforehand, the precaution that I could have taken, but I didn't, and what happened after. So, that is pretty much it. 100%. So Canes and chill. Yes. All right, guys. Well, I hope you guys all have an amazing rest of your day. And continue working hard, continue following your dreams, let your passion be what drives you in your success. If you guys want to join our free trading community, TechButt Solutions, we have a little bit over 95,000 members. That's the third link in the description. Feel free to check it out. Also, if you guys would like to join my private group and learn to trade and work and trade with me every single morning and watch me trade live, be sure to click that first link in the description and learn a little bit more about what that and that private group has to offer. I hope you guys all an amazing Thursday. And like always, guys, let's make sure that we end the year on a green note. Take it easy, team.